Hey guys, how is everybody doing out there? Thank you so much for being here. It is 9:15 here in Hill Country. Get this, my weather this morning said, or I got a notice from one of the news stations that said it was going to be we're going to have tropical rain showers all day or something. And I'm looking outside my window right now, and it's foggy because it's so I guess it's rained all night and it's just super humid. It's like a rainforest out there here in Austin. It's not too hot though. It's probably when I went out this morning, it's probably 85 degrees or something. Anyway, I don't have very much to show you guys today. I was just my a lot of my stuff is broken right now, but that's fine. I just want to check in with you guys, see what's up, see how things are going. We could talk. Hey, Marcus, how you doing? I saw that BLOX paid a dividend. I want to talk. I figured we could talk about that or whatever. Look in Discord and see what you guys have been talking about. But probably not much going on in the market. I haven't even checked it. Well, there it is. It's up. Okay, that's great. That is wonderful. I still have my feelings hurt. The market's over its freaking all-time high, and my account still, as of yesterday, it was still underwater 1%. I mean, from where I started, and I invested right here, the 11th, right there, 11th or 12th. So it was the SPY was at 605. Now it sits at 625 almost. So anyway, all right. Well, you can't get your feelings hurt. There's no crying in baseball, and there's no getting your feelings hurt in the market. You got to take responsibility for your decisions. I made the decision at first to have a bunch of single stocks like AMD and Misty and stuff because I was hoping that the Trump phenomenon would carry on just a little bit longer through the first quarter. But anyway, it did not. So anyway, all right. But that's good to see. It's up 70 bips. You guys all sell premium in my room. So, I mean, anyone that's selling premium wants the market to go up. Even if you're selling calls, you still want the market to go up because when the market's going up, premium's collapsing. When you're generally selling premium, this is good. When the market's down, it's generally bad because you generally put on your positions yesterday. Let's say the VIX was 20 yesterday, and then this morning you wake up and it's 25 because Trump tweeted, and it blows up all your positions. I mean, that's kind of what happens. Really, when you're trading like you guys do, you're trading volatility more than the market. You're also trading the market, but basically you're trading volatility. All right, guys. Especially when you trade like Scramble, who does a lot of straddles and strangles and stuff. All right, guys. Let's see what else is up. There's this AMD and AMD. I still have my feelings hurt about this one. It's a good thing I didn't stay in it, though. I mean, forget about AMD because AMD pays a huge dividend, but just let's look at the underlying from where the underlying was. So what did I say? The December 11th? Actually, December 11th was about 137, which is where we're at now. So I did well at first with that thing. I mean, it was wonderful. But anyway, all right, that's AMD. Amazon's up. Everything's up. Everything is up. I need to pay my Google bill, and all my freaking links are. I've used so much data. Anyway, I'll pay you today. That some of the stuff isn't working, but the good that we can still look at the top 20 list. So let's see what the number one fund is of the day. I ran this last night. So MSFY number one from Curve. Curve jumped back in front. Then Soxy number two from Next. We have NFLP also from Curve. Now NFLP is 5 days above 5 days above average. Now MSFY is 7 days above average. So these are actually days above average. That's how I'm comparing them. So the max factor will always have something on top, even during a bad time. The max factor does not going to try to predict, and nothing can really, but it's just showing you what is hot this quarter. Those in theory, though, if you would have gone back a quarter and you would have had these 5 funds, you'd be murdering it. I mean, now I don't know if you'd really want to put 2 different Microsoft-based funds in the same company, though. I need to work on some details of the max factor. I want to maybe try to license it to a company to do it like Dorsey Wright or something, and do and just keep the top 10 in the portfolio at all times. But there's all kinds of things that would have to be worked out. But that's the first step in getting an ETF made, according to my research, is you have to license an index. Anyway, all right. So there's KQQQ, Maxi. But now that I know how to run Python, pretty much, especially as I get better, I think I could put out a professional white paper and license an index. Now, whether I could get a fund to use it, that's another story. That's another story. But I love this GPTYs right there. So KQQQ, somebody corrected me yesterday. That is tech. I mean, it is the NASDAQ, but it's just the tech part of the NASDAQ, right? So it wouldn't have like banks and stuff. It wouldn't have a home builder. It's just going to have, tech stuff. So YBTC looks good. I didn't look. Is Bitcoin still on a tear? Yes. Up 1 point. Oh, look, it hit 110. I know. I thought that was the breakout. I guess that's the level. Okay, I'm going to show you guys something. This is absolutely free. There's no charge for this whatsoever. This is something, and I don't have any evidence like a lot of my stuff. It's anecdotal, but it served me and my friends well over the years. That pattern right there. How do you guys play that pattern? You see that pattern all the time. I call that knocking on the door. So, it went up. Bulls didn't have enough power to get through this time. Pull back, found some buyers. There was probably a gap. There's places down here where buyers didn't get on board. The smart buyers waited for their price. Boom. They buy it, run it through. Oh, there's still not enough of us to bust it through the gap. Okay, we go down here, find more buyers. But the point is the lows are getting higher. So but the highs are straight across. And you can do the same thing in reverse. That this pattern's going this way. I mean, that's been my experience. I love it when I see patterns like that. To me, that's a breakout pattern. It's a pre-breakout pattern. Of course, the place you want to buy is when it pulls back and hits this other line if you can. But anyway, I just like that pattern. You can see it in all time frames, and you see the reverse one lots of times before the market's fixing to go to, I could show you the reverse one. The reverse one happened in March and April, and you get because the bulls are getting more strength. The highs are getting higher, but the bears are just holding them off. But it is just a matter of time before that one breaks through. I like to play that pattern from a bullish side and the reverse from a bearish side. And I know it's a wedge and stuff in the books and stuff. I call it a knocking on the door, and the bulls are just gathering enough freaking power to freaking bust through that. You could think of it like a football play. Also, I think in terms of sports and a bunch. All right. Well, that's a bullish pattern, but yeah, tell us something we didn't know, Max. You guys have been telling me forever. 3 weeks ago, I saw on Breakout Watch. Bitcoin's going up. Bitcoin's going up. So I'm not trying to take credit for it. You guys are all over it, but that's a good pattern to see. What else? All right, so let's see what else we can look at. This is pretty interesting. This is what I've been doing all night. So what I've done is I'm working with a couple of friends on trying to figure out this goat spread. So I had to modify it because one of my friends found something that wasn't going to work, and another friend found something. So anyway, I've been modifying it, but I've run the test, and you can download every trade. Tasty Trade, you can look at every trade individually. So once I did that, I downloaded that spreadsheet. Then I told AI to go pull the quarterly results and the yearly results. So just like when you're looking at a prospectus, they always show you the quarterly and yearly results. Even on a brand new fund, they'll show you the back test. So the back test you have is important, that it's accurate, and for if you're trying to license an index, that you can that you can reproduce it. And, it's also important it has what they call alpha, which is, good. So, this one is great overall. If you look at this one overall, it's doubled the SPY's performance with the same risk. So, that's good. Double the SPY's. It has a 20 CAGR over time. Okay, well, that's great. Problem is, last year the market was up, I think, about 20%, and this was also up about 20%. But the year before, if I remember correctly, the NASDAQ was up 30% and the SPY was up like 25%. I need to have AI. AI didn't have the prices of SPY memorized. I need to go download SPY's prices, put them side by side, and anyway. But I in my head, I'm just saying this is a problem because in 2023 this idea would have been a massive underperformer. So there's something about what I did that made it perform better a long time ago. So anyway, so maybe back to the drawing board, but these are better than yesterday. At least I've got the drawdowns controlled. And you can also look at, I also have quarterly performance on here. So you can look at right here. I don't have that much to show you guys. That's why I'm talking about this. I'm sorry if you guys aren't as interested in this stuff as I am, but I'm hoping my two friends are watching. Maybe they're anyway, and I just emailed them this morning too. But here's the worst quarterly. Okay, so this isn't great either. I mean, down 22% in a quarter, but that's first quarter of 2020, and then the next one, it was up 26%. But and I'm testing two different versions, but they're very close. One's a 1x2 spread, one's a 1x3. They're very close, and it now has a stop loss of 10% on it, a 10% stop loss. No take profit, just a 10% stop loss. But anyway, so the first quarter of 2025 it'd be down 8.2%. That's not that bad considering the first quarter we've been through. And now it's up 14%, but on the year it's up like 9% right now or something. That's in line. That's in line. But I'm wondering if I have a problem if too much of the returns come from, or maybe forget about too much of the returns come from a long time ago. If you have a fund or an idea where too much of the returns comes from one event, there's one trade in here from April 8th that made the GOAT $263,000. Because these are basically risk reversals or covered strangles, whatever you want to call it, but they're selling premium, but they're long at the same time, just like any of my other ideas. So yeah, on April 9th, they had a very, very, very good day. The premium they sold collapsed as volatility collapsed, but their longs that they maintain, what made like 163,000, some ridiculous amount. But I tested it and I stopped it before that date, and it still doubled the SPY's performance. It wasn't all due to that date, but that date definitely helped. And I'm trying to think of stuff like that right now, trying to shoot holes in it. So anyway, I have all day tomorrow to work on it. I'll work on it tomorrow, and I won't even do a live stream and bother you guys about it. But but it's what I'm working on right now. But I'd be happy with this performance. Look at this: 2013 up 14% in a quarter, then 4.7. Then 3.7, and then 16.7. Oh, and the other thing was the Tasty Trade Backtester figures out your returns on minimum amount of capital. These both require, one required 130, one required 160. I started them both with 200,000, and I think that's something like Jay would do. If I would have started them with minimum capital, but on the other hand, if I would have started them with minimum capital, then my returns this year would have been better and may have been outperforming. So anyway, all right, guys, that's all I'm going to bore you on that. What do you guys want to talk about? I just don't have that much to talk about. We can look at the buffer report and stuff. Let's check that out. But you guys you get to hear whatever I'm interested in at any given time. So that's what you guys are hearing about, because that's all I've been doing. Now, last night was my latest night. I finally took a shower and got cleaned up before that Twitter Spaces. But I need to take another one right now, a good hot shower. And it's going to be rainy and humid outside. It's going to be a great day to hang out inside. What were we going to? Oh yeah, let's look at the GPTY verse. Okay, What's going on? Bobo's down. Okay. Who cares? I mean, this is boring. Everything's doing great. Okay, perfect. Index buffer report. This is more I care about. These are the good funds right here. Heck yeah. Look at that T-SPY. That's a good fund. Why would you want a high yield fund based on one stock when you could get a high yield fund based on the NASDAQ? All the ideas I'm working on are index based. That's what I'm trying to do. I mean, I like indexes. All right. There's feet off a little bit today. 5E's off. YQQQ is off a little. It's off 1%. The rest of them are pretty much in line. It looks like ZVol is outperforming by a little bit. Gosh darn it, I didn't get it. I thought I have one here somewhere. Okay. Hey, Jackson, how are you doing there, buddy? How are you doing there, buddy? You want to come make an appearance on the show? You want to come say hi? No. He doesn't want to say hi today. All right, so I'll talk about whatever you guys want to talk about the rest of the time. But yeah, we can talk about blocks. I'm excited about blocks. Let's maybe look at some funds. Marcus, what fund do you want me to look at? You guys got what's the hot new fund out? Did you listen to my Twitter spaces yesterday, or not my Twitter spaces, but did you listen to the Twitter spaces that I was on? I talked about you guys. I talked about you guys. All right. Hey, Michael, how are you doing? Did I include Yield Boost? It's on the list, yes. I found something that wasn't on the list just yesterday. I'm always finding something. Just yesterday, WEEL is not on the list. We were talking about that a couple of days ago. I put it on the list. It's middle pack. It's good. I think those other ones are mid pack also. But yes, I do have YSPY on there for sure. I'm not sure about YQQY. I think I tried to put it in there, and I don't know about that one, but I do have the SPY based version in there. So anyway, hey Dan, thank you so much for being here. Not sure why the YMAG dividend was so low this week. Well, let's go look at that. Let's go maybe look at. Let's try to. That sucks though. I'm going to take a guess though. I mean, in the past week, just looking at the VIX, and this isn't this is the volatility of not of the Mag 7, but of the whole market. So everything's down. The past 5 readings have been the lowest they've been, even compared to like 2 weeks ago. It's lower by 4 or 5 points. Now, at the 1st of June, it was at this level too. But honestly, other than the 1st of June, and we're lower than the 1st of June, we're getting crushed. And so that, let's just say this, if we went back, we could probably this might even be good content or something. I bet I could, whenever volatility makes a bull cross. So it was Monday, February 10th. In other words, started sloping up. It also did a back last August. You could probably allocate to the high yield funds or to something that's long volatility. But then whenever you have both red, that's a sell signal, especially, and then it crosses the other way. But I'm saying now we have the counter trend, the market going the other way. But yeah, whenever volatility is sloping up, what I was going to say is I could make a chart and I could show the slope of volatility. And then I could show YMAX and YMAG's percentage dividend payments. And I bet you they paid more in March and April, in May, and then they're paying less in June and July and August. I don't know if it's correlated, but for instance, I'm thinking the slope of volatility matters more also, but like December of 22 and then into 23. And I bet that was probably also a tough time for premium, but I bet you the 2020, I know the 2022 was a great time for premium, right? Bad time for your NAV, great time for premium. So anyway, I think you're just getting hurt. Look at the slope of the top line. The top line's the 50 period moving average. Bottom line's the 200 period moving average. The 200 period's rolled over slightly. The 50 period is just absolute crashing. In fact, the 50 period, I haven't seen that steep of a slope in forever. Look, back here in late 2022, it didn't steep that slow. Probably after 2020, yeah. That's it. That is a historic level of volatility coming off. And other than 2020, I don't think we've, this is one for the record books. I really think that slope there might even be steeper than 2020. 2020 just dropped from a higher level, but in any event. But on to my first thing. I was talking about, well, this fund's not performing as well. My idea, it doesn't do as well recently, but it did well a long time ago. That also probably deals with the slope of volatility, the volatility environment at that time. And it also deals with the skew, because when you're doing risk reversals, you're selling puts to buy calls, or sometimes you're selling at the money premium to buy out of the money premium. There's, different ways to do it. So, and I bet you the skew environment back in 2013, 14, and 15 and other stuff was probably more favorable than it is now. So, I need to work on that. But anyway, my two friends that are helping me, I'm getting a lot of input from them, and so we'll get it figured out. We'll get it figured out between the three of us. All right. Well, all right. Let's just talk about other stuff. But anyway, Dan, I'll make sure it's in there. Will is now in there. Will's mid-pack. I'm just gonna blame it on the volatility for the dividend being low. Marcus, 14 cents weekly dividend. Can you tell us the distribution yield on that? Well, the first thing, okay, let's multiply 14 times 52, right? And I'm bad at math, so we'll just do 14 times 50. All right, I like to estimate stuff. So what's 14 times 10 is 140. 14 times 50 is 70. And then we could also do the extra 278. So, darn, I forgot what I was doing. 14 times 52. Yeah, okay. $7.80. That's what it is. 70. Yeah, right. It's 14 cents. $7.80. It's not 78 cents. That wouldn't be enough. Yeah. Okay. Anyway, somebody correct me if I got it wrong. I'm really good when I'm not on the spot, but anyway, so let's think about that. So $7.80, how much did it cost? I bet it started at 20 or 25. So if it started at 25, $7.80 would be, you have to think what fraction is $8, call it $8 of 25. Well, $8 is a third of 24. So we'll say a little bit less than a third. So I'm thinking 30. I mean, just based on that now, but oftentimes the first weekly is comprised of a 2-week or a 3-week paycheck, because they're just trying to get the pay period. We should probably get a more accurate guess after we have a couple of them, and then we'll do the same thing. Just find the average weekly, multiply it by 52, and then look at that number as a percentage of whatever it costs. In other words, if it costs 20, but you're going to get 10 of it back, it's a 50% payer. That's the way I do it in my head, just really quick. It's easier to do monthly ones if that was 14 cents a month, because then you just have to multiply by 12, and that's 168 or something. So, but if that was a monthly payment, just think about that, and it got paid $1.68, and let's say it started at 25. $1.68 related to 25 is maybe 5-6% or something. So that would be a kind of a low payer. But anyway, it's going to pay more than that because it's paying four times that much. So it's going to be, I'm thinking, did they say it's going to be? Didn't they say it's going to be 25 or something? I thought it had it or 20. I don't know. For some reason, I had 25 in my head. I'm guessing David Nicholas. I've never met him. Hopefully he'll be in New York, and I'll shake hands with him and try to get him to come on our channel. He's on other people's channels all the time. But he may not want to come on ours, but just not because of you guys, because of me, and nothing to do with you guys. But anyway. So Michael, thanks for being here. If I haven't said so already, hey Mark, how are you doing? I hope your trading's going well. You know, you're definitely a premium seller, so you should be doing pretty well when the market's doing what it's doing. And I certainly hope you are. Okay, so Marcus, yeah, that's not bad for a $20. Oh, so it's a $20 stock. Okay. Yeah, so if it's $20 stock and I came up with seven on 20, you know, that's it's 35%, right? It's 35%. All right, what else you guys want to talk about? Maybe let's go to Discord and see if there's anything else we need to talk about. Are you guys happy with the? I know that yesterday some of the rec shares paid. TNA. What else can we look at? Let's see what trades expire today. Well, we haven't really been talking about much, but sometimes I do trades like months ago and they come off. It's always good to look at them as they come off and try to see what the heck was I trying to do here. Try to repeat it. Oh, I'm testing the goat in real time too. This is like 3 versions ago of the goat, but anyway. But yeah, that's the basic gist of it. Big flat spot, and then you make a lot of money if it goes up. It's just like anything else I ever show you guys. I just, you know me, I like max convexity. I like asymmetry. I like owning options on that tail out there in case the market melts up. If the market doesn't melt up, you guys saw what I did in whenever it's under the 200 period moving average, just don't do anything. You know, I mean, just stop trading whenever it's above, then start trading back in the selling premium, trade in the direction of the trend. And, you know, it's not foolproof, but it helps keep me out of trouble. All right, what else are we looking at? Oh yeah, let's see what other trades are there. But that's the goat's killing it. The goat is absolutely killing it. UVIX, SPX. This is so many versions of because this is when the goat was still based on 1 DT. The goat is now based on 5 DTs. So that's still anyway. All right. The 1 DT was too quick. It did perform really well, but the problem, it was performing really well because there was no such thing as 1 DTs 10, 12 years ago. All they had was Monday and Wednesday expirations. So you had 3 DTs and 5 DTs, and those are your choices. Or 5 DT is the only thing you pretty much have on every day of the week, where you could get a 5 or a 6 on it, or a 4. You could get close on any given day of the week. Anytime you put on the trade, you could get close. I was calling it one day, but it wasn't one day. Most of those trades were lasting a week. So anyway, longer term YOLO. So when does this expire? 50. Okay, 5 hours. Long ones expire today are this UVIX. I'm sorry if you did this one. Gosh darn it. Well, this would have worked if volatility would have gone up. All right, Mark, what are you talking about? Your puts are okay. Cover calls not. Yeah, I know it. That's yeah. Did you get are you getting your strikes blowing through and stuff? I mean, that's the problem with it. Anyway, but but I'm sure you've rolled them a couple of times, and so it started at 20. So it's currently up. So I'm too lazy to even check. I knew it started at 20 or 25. So I figured that the ratio, we could base it on that. But yeah, if it started at 20 and it's up 12%, that means it's, but it's up 12% and it's paid that. It's given you a 14-cent dividend on $20. $14 on 20 is not bad. That's 0.7%. 70 bips, I think. Or is it 7 bips? I think it's 70 bips. Yeah, I think it's 70 bips. All right, everything stops at 1. That's true also. It's good. Maybe because I'm going to be doing other stuff anyway. I'll come back on here just because I'll be bored, and I hate doing these. I like showing you guys what I got and talking. So I'll come back on here and we'll do an end of day live stream. I mean, why not, right? I just want to check in with you guys. We'll see how we finished up the day. But yeah, everything closes, so I'll be back later. I'm just going to hang out here, pray for the mail to come. That my license wasn't in the mail yesterday, but I know it's going to be here today. So I'm just going to do that and work on these back tests, talk to my friends, and get more input from my two buddies, see what's going on. All right, guys. Well, I've run out of stuff to talk about, and that's rare for me, but it has happened. Saw some badass. Gosh darn it! I'll show you. I have stuff to show you, but I'll show you on the afternoon feed. I woke up yesterday morning. There's some gigantic bucks out there, and I know them. They're friendly. They're young bucks, and they've been born since I lived here, so they know they're domesticated. They'll walk right up to you or pretty close. And I got some great video of it. But they're big boys. They're probably 2 now, but they were probably born in the meadow behind the house. And most bucks won't come near most bucks are scared that these are domesticated. But I want you to see the size of the rack on these things. It's like a Sydney Sweeney type rack, but I mean on a buck. I mean, But I was here today, speaking of Sydney Sweeney's rack, I was hearing today that I saw a clickbaity article on somewhere, and it said that Sydney Sweeney's boobs scored her an invite to the Bezos wedding. That she doesn't even know those people or whatever. I heard she hooked up with Tom Brady. I heard Tom Brady, but anyway, after the wedding. But weddings are great places for that kind of stuff. Tom Brady, that guy's a dog. He's got to be almost my age, but my Lord, he's out there running around with movie stars and models. That guy's something else. I like Tom Brady. I've never been a Boston fan or anything like that, but I think he's anyway. Will is also slept on. Yes, it is, and I didn't realize it. And I kind of talk. I'm not a big fan of the Will strategy itself, and so I kind of discounted that fund, but heck, it's doing great. I saw that yesterday. I saw that and I was embarrassed. I was freaking embarrassed that I didn't have it. See, here's the proof. I left the tab up, and so I remember talking about it. I was embarrassed that it wasn't in the Max Factor. So if there's anything else you guys know about, and we'll find them. But I think I got everything. Be interested in. Or strategies that I don't even like, but just for comparison purposes, because that's the thing. I want to be the number one source for that kind of data. I really think Dorsey Wright does a good job, but I think they use too long of a time frame in their technical analysis, and they keep you in stuff too long. But I know the reason they do that is that when you use longer time frames, sometimes it helps avoiding whipsaws. So it's like anything else. There's really no right or wrong answer. There may be a right answer for you or your fund, but there's not one truth or whatever. Look at this one. This one's doing kind of that knocking on the door pattern too. You see that pattern all the time. And let's see. I just want to look at the position. So right now, they put Hui in here. Okay, well, they're starting to switch a little faster than they used to. So they got Hui. They got Ybit, they got JPMO. That's a good one, man. That's a stealth one. And I would have picked that up if the Max Factor we were doing the Max Factor 6 months ago, because it would have been all over it. Anyway, there's Infly. Infly has been all over the Max Factor for a long time. And Fibby. Okay, well, I don't know. I like the concept of feet and 5E. Let's line up feet with. So feet ought to beat YMAX if it's really good. So YMAX, they just buy everything, and feet, they're specializing, and it's concentrated. So they ought to do better on the way up. They ought to do worse on the way down because of the concentration, but it depends on how their scheme is going. I'd like to read their white paper. I'm just obsessed with indexes and white papers and strategies and that kind of stuff. Let's see. So feet ought to just, if Dorsey Wright, if the plan's working, feet ought to just dog YMAX. I ought to just dog it. So first of all, let's go for the quarter. Well, this is year to date. We'll go year to date. Look at old YMAX. YMAX is, Now, I did say feet should do worse on the way down because of the concentration and better on the way up, other things being equal because of the lack of concentration. It looks like the worse on the way down prediction came true, although WiMAX was down pretty bad. It was down, it looks like down almost as much, but WiMAX is up a little bit more. And all I'm going to say, the reason that's because WiMAX owns the whole index. It owns everything. Feed is trying to pick the 5 best. Well, there's some delay in the time because of the, like I'm saying, there's some delay in the time when the fund actually becomes the best, and it flips the indicator to get into the portfolio. And that delay, I think, is manifested when you see, feed. It just lately their strategies maybe been a little bit late or whatever. It hasn't, I always say if I had to put all my money in any one fund, it'd be JetQ. But 5E would be it. If I had to put my money in any one yield fund, well, high yield fund, it'd be 5E. JetQ would be any fund period because it's so low, or maybe QILG, something like that. GPIC, something like that. But if you had to do it in any one high yield fund, I might pick this one because it's not really a high yield fund. It's 40% just the high yield stocks. So it's actually more like a mutual fund because it owns the actual stocks in addition. So 5E ought to do better than WiMAX. I mean, or there's nothing really like 5E to compare with, but let's see how 5E compares to WiMAX. And 5E is doing better than feet because it has the actual stock, and so it's catching a little bit more upside. It's still a little bit behind YieldMax, though. Anyway, I didn't really intend to talk about that, but I like talking about feet and 5E, and it just kind of came up. So anyway, okay, now this time for real, barring any other comments. And Dan is right. Dan and I are on the same page about a lot of stuff. I don't think Dan's real big on liberals either. Dan and Mark and I aren't real big on liberals, even though a lot of people I'm really close with and love are liberals. But that's fine. That's fine. Just that's fine. We that's fine. But anyway, all right, guys. And I'm just joking. Like I say, I'm actually kind of liberal. I mean, in the broad sense of liberal thinking, liberal. I'm open-minded. I'm liberal in that sense. I'm not for a lot of liberal ideology and stuff, but I'm very open-minded, and I'm about you do you, I do me. I call that being liberal. All right, guys. Well, I appreciate you guys, and I hope you have a wonderful day. And yeah, let's be back here about 1 o'clock or something, right? Oh, I'll look at SFAL real quick. Sure. Yeah. As soon as I go from here, I have to go back into the freaking lab testing this thing, and man, it's boring. All right, let's look at SFAL. It's fun though. What is going on? Oh, SFAL. There we go. SFAL. Okay, so let's look at SFAL. Geez, it's up 3% today. You got to be kidding me. These guys now. So these guys. You read the prospectus and they are not transparent. They don't really tell you what they're going to do. So it's kind of harder to get I think these guys are hedge fund guys. They got Mike Green. That guy, not only is he an option bro, but he's also, I think, really good at macro calls and stuff like that. In my opinion, Mike Green worked for the Peter Thiel family office. I think Mike Green's also, even though he lives in San Francisco, I think he's kind of on my same team ideologically also. I don't know, maybe not, who cares? But so he's one of the partners here. I don't know, dude. I think they just have a bunch of hedge fund jockeys that just do this. And I would bet you, and I this is a theory, I don't know if I can prove it. Didn't they have a prospectus change recently? And I bet you they changed the prospectus because they saw the market pulling back and they wanted to put more upside on as it recovered. And you see that all the time. The bigger houses try to time the market. Look at like GPIX. Look when they brought this public, right after the 2023 October pullback. Do you remember Halloween 2023? I do. It was the low. And that's when GPIX came public, I believe. Let me see. It may not be right. Let me see. Wasn't that right? It came public. Its first day is like November 1st, 2023 or something. Let's check. It'll say right here. Look at that. Look at that. And don't tell me these guys at Goldman Sachs didn't know that. If I'd showed you a whole chart, we had a massive pullback before that. That's a great time to bring a fund. They brought it public on the low. I mean, the very next day. But anyway, I think that SVOL is doing that kind of stuff too. They have people that know how to trade the market and are trading the market. The problem is I'm looking for mechanized strategies where you can put it on every day, set it and forget it. Something like Jay does at Yield Max, where it's a method, and maybe there's decisions Jay makes and stuff, but they have a pretty strict outline. They're going to do this. They're going to go out. They're generally going to put this spread, it's not just like one day we're going to buy futures and the next day we're going to short them. But anyway, I think SVOL is just trading stock. So you have to, or just trading. So you have to be comfortable with the people at Simplify. But I mean, they seem to be doing a good job lately. Let's compare SVOL with 5E. I mean, the feed in 5E, I guess. I mean, doesn't look great there. But if you look, I mean, SVOL was down 25%. That's not great either. I mean, it's all right, but I'm saying it doesn't stand out. But anyway, all right, guys, I really will let you go this time, unless there's another question up there. Okay, so, it's up 10% the past week. So yeah, no, and I'm not, yeah, it is. I'm just saying I can't replicate it. I can't get a handle on it. I can't say, well, it's up 10% this week because they're doing covered call spreads and they're only riding on half the portfolio. And then when it goes over this strike, I don't know what the heck they're doing. Because they used to, it looks like they're just buying futures now. I mean, they used to have a method where they were selling futures and trying to take advantage of something called roll yield, which is like time decay, but it's for futures instead of options. In futures, they call it the harvesting roll yield or something. Well, but that involves selling futures and doing something else at the same time, selling 1 month, buying another month, and then buying an out of the money call. And it's like an arbitrage strategy, and it makes a little bit of money at all times, a little slow, steady drip. Well, they aren't on the slow, steady drip anymore. It seems like they're making money in big chunks. So I guess I really don't understand it. Like I always said, if the station keeps doing better, I don't think it'd be unreasonable to ask Mike Green to come on. I just need to get through this. I need to get my all this stuff that I'm working on right now done before I start another project. Even if Mike won't come on, I'm sure they'll send someone for the company to talk to us. We can ask him, but I'd like to talk to Mike. Mike doesn't realize it yet, but he'd like to talk to us also. Mike Green, he probably doesn't know about us, but I think he would like us. I really do. So anyway, yeah, Marcus is definitely one of the most complicated ETFs you've seen. It's ironic since her name is Simplify. Yeah. All right, guys, I appreciate y'all, and you have a wonderful day. I will see you about noon or 1 or later, whenever I get bored. All right, see ya.